We are now seeing the chorus of emerging markets bear getting louder and louder given all of this uncertainty. Has what's happened in the last few weeks changed your portfolio strategy, especially with the Fed turning a little bit more hawkish than we expected today?
Well, I think some caution is definitely due, but I think there's a lot of bad news regarding China already. And with regards to the Fed, the tapering, even with the slightly hawkish tone from last night, tapering is likely to begin in December, is likely to end by the middle of next year. That's something that the market has been expecting for months now, right? So I don't think this is a big major sea change. And with regards to Evergrande, all those people who are looking for a Lehman moment in China probably have to wait another turn. So I wouldn't treat this as completely bad, but there's definitely a lot of risks up on the horizon.
But the ongoing trickle of news starting to hurt sentiment just overall around the world. How do you position in this market? Where do you go for some safety and comfort?
Sure. Look, I think on the fixed income side, because the yield interest rates are still so very low and likely to move up, it makes it very difficult to pick places in fixed income. So I think we're still overweighing equities. And within equities, we want to be relatively defensive. And our top favored sector is global healthcare. When you look at the COVID situation, for example, the ultimate objective is to kind of live with it, right? Treat it as a flu. And there will be tremendous sustained demand for things that could use to be treating this disease. And I think the overall demographic and demand situation in the healthcare sector is still very strong. And it's been performing very well with very low volatility. And I think that's one of the areas that we're most favoring.
Ken, does a messy fallout from the Evergrande saga potentially impact stocks that would otherwise benefit from cyclical growth in China, from the recovery story, in particular from the wealth effect and consumer side of things?
Yes, so this is an important point, right? So even if Evergrande makes its payments, and I think they probably will, otherwise, all this maneuvering in the onshore bond market means very little if they're going to default on the offshore. In any case, I think even if they survive this bout, there's still going to be tremendous pressure for this company to survive. And even when you look beyond Evergrande, you still see a lot of risks with the rest of the real estate sector. And so this real estate development is 35% of fixed asset investment in China. And so it's massive, right? And so far this year, it's been growing at 12% investment in real estate. And that's an uplift for the economy so far this year, but that's likely to be going away and might become a drag, right? And so that's the big problem here, is that China is experiencing a broader cyclical slowdown and more policy help is needed. And we did see the PBOC react a couple times this month. Today, another 90 billion of net addition to liquidity, but we need something more, right? So I think the channel that is likely to come would be credit provision from the government bond space, from funding for fixed asset investments outside of property. So there's a lot of areas that they can try to boost. But at this point, even when you look beyond the Evergrande default issue, there's still quite a lot that needs to be done to restore economic growth.
We are just getting some more news when it comes to Chinese estates. Of course, this is one of the biggest strategic backers of China Evergrande. And in fact, the CEO is a close friend of the Evergrande founder and in a poker club with him. And one of their key investors now saying that they may sell all of its remaining Evergrande shares. They just announced that they sold close to 110 million Evergrande shares at a $9.5 billion Hong Kong loss there. So we continue to watch that. It just seems like they're cutting their losses in that sense. Does this have broader implications for emerging markets? How does an EM portfolio look if you're rebalancing from perhaps, trying to get away from that exposure in China?
I think this is it is a clear risk, right? So if the way China's economy is most connected to emerging markets is through commodities channel, and the property sector is a big source of demand for those commodities. And so at the end of the day, if we're seeing a significant drag from property investments, it'll have to be made up somewhere else, such as in fixed asset investments. So I think it's a big hole to make up. But fortunately, for some commodities, such as copper or aluminum, or even steel, right? You have two trends, right? One is that the global trend towards green development, demanding a lot of commodities that feeds into that supply chain. And on the other side, China is continuing to reduce capacity in these industries, similar to what it's doing to the property sector. So what you end up seeing is that the prices for these commodities might not be hurt tremendously because of that supply-demand dynamic still kind of tight.